Steve, lots of financial markets have seen big moves since about October, and if anything, the energy markets led the way in volatility. What was the big picture in energy prices going into late 2018?
Well, that's true, Dana. After advancing a little over 2.5 years, crude turned down in the early days of October. It fell steadily until Christmas Eve and lost nearly 45% of its value. At one point during that free fall, there was a record string of 12 consecutive down days. So it proved to be a brutal ordeal for stubborn bulls. On the flip side, it was a home run for the bears.
And how about natural gas?
Well, natural gas proved once again that it can be among the most volatile of all commodities. After trending sideways in October, it caught fire in November. In 2 short weeks, it had jumped nearly 60% in value, then turned around and dropped 20% in less than 2 days and went on to erase over 40% of its value by year end. Now that's two-way volatility on steroids.
I'd like to ask you about the Elliott side of both markets. What did the wave pattern look like in crude oil prior to the turndown?
Well, crude had risen from its 2016 low in 3 distinct waves. It's a zigzag. It's a common corrective wave pattern. Now, in the final leg up, the market had formed a triangle between late May of 2018 and early September. And since triangles always precede the final leg of the wave structure at the next higher degree of trend, the subsequent advance, which R.N. Elliott termed as a thrust, should finish the larger 3-wave structure. Another key piece of evidence was the presence of price momentum divergence that often accompanies important turning points. What we didn't know at the time was how high the final leg of the advance would stretch before the market turned down, but once trendline support was broken, it was apparent that a major top was in place.
Steve, what comes next?
Well, a corrective retracement, of course. It's early in development, so it's hard to get a read on a prospective wave structure, but I'm anticipating a proportional 3-wave advance in terms of both magnitude and duration.
Okay, and what about natural gas? What did its wave pattern look like prior to its dramatic price action?
Natural gas was tracing out a similar 3-wave advance from its 2016 low, a zigzag, but it was lagging behind crude. In other words, natural gas needed to finish its final leg up as crude's final leg was ending. As a result, natural gas prices thrusted higher as the preceding triangle suggested, while crude oil got clobbered. Here too, we didn't know how long it would take to complete the final leg up. Best guess was that it would be in the winter months, where it's common to see natural gas prices spike as demand for space heating soars. Now, given the extent of the subsequent decline, however, it looks like the mid-November peak will mark a lasting top.
And I understand that the near-term action in natural gas has an especially interesting pattern.
Yes, a bullish island reversal pattern formed. It's defined by 2 price gaps down and then up, leaving the intervening price action standing out as the island. Now, prior to the introduction of virtually 24-hour-a-day trading, I would have said the pattern's implications are unmistakably bullish. A good example of a bullish island reversal occurred in August of 2002 and arguably again in November, and you can see how well that worked out. Now, with the existing extended trading hours, it's not as clear-cut. Price gaps in the energy complex are almost always formed in one of 2 ways, between Friday's end and Sunday's opening, in which case they commonly get filled, and then during periods of extreme contango or backwardation, when prices roll from one contract month to the next on the continuation chart. Now, prices rose substantially following the recent island reversal, and further near-term strength or not, if the mid-November peak marks a major top, the market should extend the sell-off until a 5-wave decline is evident. I'd note, however, that periods of strength can be substantial given the heightened volatility and the potential for additional Arctic air to dig deep into the U.S. and temporarily increase demand.
Thank you, Steve. I'm sure we'll have much more to talk about soon.
Sure, Dana. Always a pleasure.